There's a lot of different ways in making money in real estate. I grew up on a ranch south of Gillette, Wyoming. I was 42 miles out in the country and went to a one-room school. There were 6 of us, 5 grades, and 8 and 7 at one time. Brothers, sisters, cousins, and the cook's daughter. And it was a ranch, one-room country school, like I say. We had a black school teacher, best school teacher I ever had. She made sure, she'd duck you alongside the head with a stick of coal if you wanted to. I mean, mess around with her. But she was outstanding. She taught me my math skills, my ability to read and write, this type of thing. But then I went to high school. I'm 42 miles from town. We go into high school, it's 3 stories tall. And there's a lot of people. I thought, how in the world? I've only got 5 minutes to go from this class to that class. This one's down here and that one's up there. How can I possibly, I'm scared to death. I got started in vocational agriculture and I took a public speaking class. Now, you can imagine what a kid out of the country feels like when he gets in front of a room of people and he has to talk. Scary. Matter of fact, it scared me so bad I wet my pants. But I built my confidence up and I started speaking. I've spoken to one group of 15,000 people at one time. I still wet my pants, but I don't care anymore because I got this confidence built up. But anyway, I was teaching school in Cheyenne, married, had a kid, and I had getting $300 a month. And I thought, nothing could get much worse than this. I mean, my rent was $120, but I was wrong. Uncle Sam drafted me. I got to go to the service, $98 a month. I found out pay scales. I had to move my house, my family to Gillette and live with their folks. I was lucky because I bought a house there, $500 down, and took over $100 payment, $138 payment. So my rent went up, my payment, and I had to pay money to pay off the $500. But when I got drafted, I sold that house for $1,500 down, take over the payments. And so I made $1,000, and that gave me enough money to get my wife moved back up to Gillette. That's probably my first good real estate transaction ever. Came back from the service, went back out to the ranch for about a year, and I started teaching in Gillette, taught vocational agriculture. And for those of you who don't know, that's cows and plows, okay? It doesn't relate much other than big ranches. A small ranch around Gillette was about 10,000 acres, but you could only run a few head of cows because it took 40 acres to run a cow. You could run 800 sheep, or you could run 1 cow. So you had to hustle on the side to even make a living as a rancher. I have found that oil and coal will make more successful ranchers than all the education that I could give these kids. I was there for 2 years, and then I bought half of a motel. We worked in it. We no longer had a house payment. We lived there. We didn't have to pay cable. Cable was already there. Utilities, they had gas at this place. I didn't have to do that. Telephone, man, I had a PBX, had 32 members on it. So it worked out really, really good. That was probably I thought I was really good because I bought it in May, moved into it, and room rents were at $8 a night, 1974. By August, I had the room rents at $18 a night. I thought I was really good, but actually I was just lucky. That's when the oil and coal boom happened in 1974. So I rented 3 shifts a day to Burlington Northern on 10 rooms. So each one of them paid $18 a night. So I effectively had a 50-unit motel by buying a 32-unit motel. Then I built a Super 8 motel. Okay, that's like having 60 apartments. Great news about that. Every day I'd get up, and I had 60 leases I had to sign that day. And the next day, I'd get up and I said, man, we got 40 of them. I got to get to 60. So every day, I had to lease. Can you imagine having 60 houses? You had to sign a lease on them every day? It sucks, man. I'm telling you, it's not fun. But the money was good. Then I was involved in the Holiday Inn, which was 144 units, and Econo Lodge, another 80 units. So I thought, well, since I understand that, I had a real estate license because I could go do real estate during the day, and my wife could run the hotel at night, or motel during the day, I'm there to help fill it up at night, all 32 rooms. So, but I started figuring out how to sell motels. I had a real estate broker. He said, can't find money now. You see, 74, I really didn't know that we were in a recession. I was a school teacher, but I couldn't spell recession. We were in one. I didn't know any different. So he said, but I think if you learn how to do contracts for deed or installment sales contract, I think there's an ability to take and use that, and you kind of know the business. So I went to hired an attorney to spend 2 hours to tell me how to spell contract for deed. And I got it, nailed it. So I started selling motels, 15% down, 10% commission. My broker said, that'll never work. You can't take all of that. He said, charge them 6, at least they have 9 on the down payment. And I said, if you'll go for it, I will take just 10% of the down payment, and I'll take 10% of every payment that's made. He said, well, that would work out fairly good. He said, you just take it in principal. I said, no, I take 10%. My money's out on interest. Yours, my money is out on interest. So he bought off on that. And we, over a period of about 3 years, I had over $500,000 out on interest at 10, 12, 14% interest. Then a crash happened. I had no money out on any interest because all of those deals started falling backwards. So that's, you can make a lot of money, you can lose a lot of money. How many people in here are wanting to buy, or how many people in here have an apartment building? Christoph, count those. Okay. Christoph's got 10 of the nicest apartment units you've ever seen. How big are they?
2 bedroom, 2 bath, on most fall, and some on 1 bedroom.
And how many square feet?
12,000.
Okay, and those will sell for around $400 a square foot? He built, they were condo units, but he built them, holding them for 1 year, 1 day, and then he'll decide whether he wants to sell it. So there's a way you can do that, and how much do you owe on those?
Those possibly ones that will own
Your IRA in that deal?
Yes.
How would you like to have 10 apartments at $400,000 a piece and have in your IRA? Okay. So in real estate, nothing stays the same very long. I don't care what it is. Apartments. When I first moved to Fort Collins in 1989, I found 100 apartments for $800,000. Fannie Mae had foreclosed on these things. I couldn't borrow $8,000 to buy those apartments. They're called the New Colony. It's over by Willenmore Park. All ground level, different buildings, all 2 bedrooms, and they were renting for around $200 a month. Okay, nobody wanted them. A guy from California, an engineer, came in, stroked a check for $800,000. Fannie Mae was happy. He was happy. Today, probably $80,000 a piece, $8 million. Didn't do too bad for a 30 years hold. Okay, it takes a long time to get out there. But at that point in time, there had been a lot of apartment buildings built in Fort Collins. And if you, for those of you that were around here, you could go down to Denver. You could shoot a howitzer down 16th Street Avenue and never wound anybody, okay? They had see-through buildings in high-rises that had been built, empty, glass all over. Apartment buildings, lenders were pulling the construction financing from the builders because it collapsed when the oil business, which was the main industry of Denver, went out the door. You could buy apartments for nickels, not even pennies on the dollar. So along comes some guy from God knows where, and he starts buying these things for 10, 15 grand a unit. And he did condo conversions. So he would map these things, put together the documents, file a condo map, and he would sell off individual units, 40 grand. So that's how a lot of the condos happened in Denver. That's how it got started. So you'll see these cycles go along. Back in '87, I'd lost everything I had, okay? And moved down to Phoenix because I thought, well, there's a place that's not gonna, there's still people, old people moving down here. It's cold in the north. I got down there just in August of 1987, just in time for the S&L crisis. You couldn't borrow money to do squat. The stock market, you've always heard of Black Monday? Well, there was Black Friday, then there's a Black Monday happened in September of that year. You could go down the street and you'd see an apartment complex over here, and this one would say 3 months free rent, 1 year lease. And it was like $400. Next door, 6 months free for a 1 year lease. $300. You could have your pick of about anything for about any way you want to do it. I think it got so bad you could probably get 11 months on a 12-month lease. I mean, it was not quite that bad, but the point is, what happens at that point, before that crash happened, those were renting for probably $850, $900. When the crash happened, they started giving the rents away free on the front end, but they would blend it over 12. And they were dropping the price of it. Now you're the guy that rented your 12 months lease started before the crash. You're paying $900. Are you happy? You'll move across town. You'll walk away from this deposit if you have to. This guy didn't want him to go, so he said, well, I'll knock some rent off of yours. So you got a combination of free rents spread over 12, and the new guy, where we're counting on the old income, now that old guy is now a new guy, and he's paying a lesser rent. So you get a compression of the rents and an increase in vacancy. It's a god-awful experience if it's happened to you. Anybody in here own apartments, not single family, but apartments? How many houses do you have, Joshua? 4 houses. So it's like having a fourplex, but you paid a lot more for it, right?
Well, they're all 3
Oh, okay. You got 4 of those, 3s? Good for you, 12, you got 3 fourplexes, basically. When we're talking about multifamily, I see it all the time. I think there is a seminar someplace out there that teaches people how to put on seminars. And there's gurus, self-proclaimed gurus, that claim that they made billions of dollars doing this. Well, if they made $1 billion or $500 million an apartment business, why are they teaching a class? Okay, you don't have to. And they're charging you, oh, this weekend's free. Oh, you want to come next weekend? That's a 3-day course. That one's $3,500. The boot camp, $20 grand. And so they seminar you all the way up to the boot camp, but you get to bring along a friend, okay? And it was done on the fix and flip model. It's been done on the apartments, assisted living. I see a lot of the assisted living seminars kind of went away because people found out, oh yeah, it makes sense. I can buy this 5-bedroom house. I can bring in 4 people, live in the other bedroom. My wife and I can make sure they're all fed. We can take care of, we'll put 2 people in each one. That's 8 times 2,000, 16 grand a month. And by doing that, then they do it and they find out that there's a lot of regulations, there's a lot of fire suppression, there's a lot of other things they're gonna have to do because they're a new business in a house taking in assisted living people. Oh, the registered nurse on staff. Oh, she's pricey, okay? But they leave that data out of the seminar. But people spend a lot of money on the assisted living seminars. Don't get me wrong, I'm about to where I need one, so I'm okay with it. You know, I've made 73 trips around the sun. That's a lot of travel. But it's, the point I'm trying to get to is there's always somebody out there that will teach you how to do this. But if you really dig down, they haven't done it. I can learn how to be a rocket scientist. I've not been one. Played a doctor when I was in high school. My wife doesn't think that joke was very funny. So, if you're going to look at doing multifamily, I caution you, I'm starting to see for rent signs in front of larger apartment complexes in Fort Collins. And I see new apartments being built by the interstate, off of Harmony, off of Timberline, off of LeMay. I would bet they have 1,000 or maybe 2,000 apartments on the drawing boards or being constructed right now. For every one of those you see coming out of the ground, there's another one laying back there that he's got the ground, he's doing the backroom stuff. If you've not built anything in the modern day, I caution you, it's painful. Christoph can attest how painful it is just to go through the city. Planning and zoning, the building department, they said, oh well, we had 21 days to look at this. We're gonna put our boilerplate stuff on this and send it back because we didn't really have time to look at it, and we have these things that are general and we can apply them to anything, okay? Am I right? How many times do you have to go in with revisions on your plans? 3? 3 weeks each time? Yeah, kind of like subdividing. If you're doing land subdivision, I've developed 500 lots along the Front Range of Colorado. To begin with, they wanted me. Little town of Severance, we want you here. I said, but it's an 80-lot subdivision. Oh, we want 80 lots. I said, you'll hate me by the time we're done because the traffic's gonna be piled up by Bruce's bar. It'll be 2 cars ahead of you at this 4-way stop sign. And that's what happens because they don't like change. People don't like change. If you don't believe that, and you're a guy, try start shaving on the other side of your face tomorrow morning. You can't hardly do it. So change is difficult for everybody, from the little kids to old people that are 73. But you have to change. You have to morph into something else. You have to land on your feet. So if you're looking at multifamily, would be anything, what, 5 units and above, right? If you have a 5-plex, a 6-plex, 12-plex, you can't get Fannie Mae financing on it. That's what they consider commercial apartments. 4-plex, still a multifamily. Duplex, still a multifamily. But you can get conventional financing on those. So financing is a struggle. Experience is somewhat of a struggle. So to begin with, if you're going to do one, make sure you vet the property managers that are going to manage your manager. Because that's what the bank is going to look at. They're going to say, never played a doctor? No, they're going to say, how many units have you managed in the past? Oh, when I get this one and one more deal like this, I'll have 200. But both of them are 100-unit deals. I haven't done it yet. So it's just a matter of you have to develop a team. And they say, well, how many apartments have you built? Well, I haven't built any. Or let's say you want to buy it. I love the way apartments are done. Multifamily, commercial, real estate brokers will say, pro forma. This is a damn asset that's been making money, supposedly. Yeah, but he hasn't been doing a very good job. You can do better. Why can I do better than the guy that's sitting in there managing this thing? I may, but why would I pay more than it's worth to get what I may be able to get out of it? So you really have to be careful of those pro formas. Make sure when you're making one, it's a plausible. If you're making a pro forma for your lender, they're going to ask for it. You have to have a business plan. How am I going to get to? How do I achieve that? How do I get there? Where's my capital coming from? Is this something you inherited? Did you make it off of selling 95 houses and you want to buy an apartment building? How did you come up with your money? How's it coming in there? Well, I've got partners. Let me see his financial statement. See, there's a lot of complexity to financing. Best way to get into financing and learn it, make friends with Josh. He's a lender. He can help you along the way, and that's what all of real estate is about. I don't know squat about, I've never built a high-rise, okay? Nor am I. But if I was, I would find somebody that has built a high-rise, and I would attach myself at the hip with that guy. I would do things for $0. I'd find out what he doesn't like doing, building his high-rises. That's my job. That's the way I would learn. And I would tag along until I understood it, and then I would kiss him on the lips and say, thank you, got it. But people like to help you also. I'll tell you a story down in Dacono when I was doing a subdivision. It was the second one I'd ever done. And I got the engineered drawings, we sent it through the sanitation district, and it comes back denied. I said, well, what for? Well, that line over there doesn't have the capacity to carry the sewage that you're going to create. So I thought about it, and I talked to my engineer, and he said, well, they're right, but where else do we go? So I went to the sanitation district, took my roll of plans up there underneath my arm, not that big around, and I said, guys, I introduced myself, and I said, I need your help. I know that people flush their toilets. I know that that stuff runs downhill, but I don't know anything about what you guys know. I need your help. Within 15 minutes, I had the plans on the floor, and all of those district members were down there. So we could divert half of it over this line over here. We could do this, and we solved the problem by asking for their help. But it's so easy to say, well, you dumbasses don't know what you're talking about. It's really easy, because I've done that before I went to them. My wife says I shouldn't say that at home either. But anyway, the point is, ask for somebody's help. Doesn't matter what you're doing in real estate, there's somebody out there that will help you. And if you find a really good deal, it's like finding a good tree. Somebody will help you climb the tree if it's worth climbing. Somebody will help you in a real estate transaction, either help you in structure, been in the same place before, want to help you. They're willing to maybe financially help you. I know people that will take and sign on a mortgage to own a part of the deal as long as they don't have to come up with the money down. A credit enhancement, it's called. So there's a million ways to skin a cat. There's a million ways to do real estate. If I have a nickel, a dime, a quarter, 50-cent piece, and a penny, how many combinations of using those 5 coins are there to make a dollar? It's 293. And there's way more options in real estate than that. I mean, when you think about even buying a house, there are people that will take and own half the house. They'll go reverse for you. They'll equity share with you. They'll come in and buy it and give you half the equity above a certain price point. There are places you can buy it with a $100 option, a dollar option. Power of options is great, okay? I've sold multifamily land, 12-month option, $1. Okay? Now, the guy exercised it, paid more than it was really worth, but he didn't have the uncertainty of going through that process, wondering if he could do it. But I knew him, and I knew he would be able to, he'd work it out. So waiting on my money, I couldn't, if he put $100 grand in the deal, I'd have to put it in a trust account. I can't take the money in a case like that one. So there's all kinds of ways you structure deals like that. You can buy an existing apartment complex. Some guy that lives in California now, he taught school at CSU, lives or UNC. Now he's moved out to California, he's retired, and this thing has suddenly became like a cactus pile that he's sitting in. It's a pile of thorns. It's hurting his shoe, it's like hurting his foot. All he wants to do is take his shoe off. He wants away from that thing, but you don't have any money. How about going to him and say, look, I would like to have the option to buy this at this level. Based on the income you've got right now, this is what it's worth. Let me have an option. I'll manage it. You don't have to pay a manager anymore. I'll collect the rents, and I'm going to make you a payment of this, your net income that you got the last year. Pay it in 12 equal payments. Now you increase occupancy, you decrease, you get a chance to go in, find out where all the hickeys are on this thing. Where are the bad hot water heaters? You got all the time, you got a year, 2 years, 3 years to do it. He's happy because he no longer has to manage it. He no longer has to worry about evictions. He no longer has to worry about anything. And he gets 1/12 of the previous year's net income for that period of time. So if you can increase rents, you can improve the property during that period of time. Now you go into the bank and say, I'd like to exercise my option. Now you have something that's real, something tangible. But that's just one way that you can make a deal. There's hundreds, literally hundreds of ways to make a deal. Nothing down, no interest. And you hear those. And there was a guy by the name of Robert Allen. Does everybody know Robert Allen? Ever heard of him? He was a little or no money down guy. The thing he forgot is he's always paying interest, a lot of interest, way more interest than it was principal. I've got a partner that has bought probably, I would say realistically, 30 houses here in Greeley, and he bought them when nobody else would buy a house, especially these houses. They were nasty. They wanted 25 grand, it's worth maybe 20. He said, well, I'll tell you what, I'll give you $250 now and $250 a month for 100 months. 8.3 years, right? I think that's how it works. So anyway, now think of the power of this thing. 50 months into it, okay, he's got almost half, he's over half of that is paid for now. His 25 grand is no longer, it's like 11. Just a short another few months and now all of a sudden he's paid for it. He's increased rents. He has plenty of cash flow. Some of those he's gone ahead and paid off just to get the guy so he didn't have to write a $250 check anymore. He's gone to a bank. Has he been in your bank, Josh? Yeah, see, that's what happens. Anyway, he now goes out and buys a $250,000 house because he has a $180 grand house over here that's renting for $1,300 a month. He then takes and pledges the house he's paid for, or if he owes a little bit, he pays that off, and he buys a $250,000 house now that is better than the one he had, and he still has the one he had. So he's a net 50% borrower. If you keep those kind of ratios, I see a lot of people now buying, I fix and flip this house, and I fixed this one up, I hold it and I'm renting it. I borrowed a home equity line of credit here, and I got that up to 85 or 90%. They can't stand a hiccup. If we have another downturn, that hiccup is a belch, okay? They'll start seeing these properties come up on the foreclosure sales again. So just be aware of that kind of stuff. There's always people out there that will help you figure out how to do a deal. And I've been doing this for 45 years, and I don't know how to do a deal, okay? I don't. There is nothing written down in stone. Maybe Moses had, that was the third tablet that he had. No, that was my license. But anyway, he dropped it. That's the one he dropped. But I have a building up in Rock Springs, Wyoming. I built it. It was 21,000 square feet. I made it into 2,100 square foot warehouse office space. Condoed them, sold off all but the last 2 or 3. Some of the investors I had in the deal came in and they took equity in the deal, take a unit. I kept one with some of the investors that I had in it. I leased it to Pizza Hut for an takeout store, $2,300 a month, 2% annual escalators, 10-year lease. Everything's perfect in that, right? Well, we're 9 years into the lease last November. The company sold to somebody out of Chicago, very numbers-oriented MBA type management company. From the contact that I had, that little store that I have doesn't make any money. You think they're going to renew and exercise the option for the next 5 years? I still owe 130 grand on this thing. End of the world. Okay. Not really. What I did is I called them, I said, are you going to exercise your option? They said, well, we don't have to let you know until 60 days prior to the termination. I said, I know, I just thought maybe you wanted some free rent. Oh, well, what can we talk about? So they're going to pay, I'm going to give them 3 months free if they'll give me 3 months earlier occupancy. I want their crap out of there. They have to turn it back to me just the way it was. I'm going to have that thing ready to go. I still owe 130 grand on it. I don't really care to make a $1,500 payment. I will have somebody in there by the time we run out paying more than they were probably. So many times these bad things happen. Horrible, end of the world. It was a hiccup. And I don't care whether it's apartment financing, apartment building, apartment investment, assisted living. I think a lot of those work on the greater fool theory. I'll find somebody that's a bigger fool than I was to sell it to. And it happens a lot. There is a chain of these ups and downs, and pretty quick you find out the place is vacant, back to the bank. But the point is, don't panic ever. I saw a guy had $1 million loan on a subdivision in Gillette when everything went south. Anybody else would have filed bankruptcy? He didn't. He went to the county and said, hey, we built this golf course out here. I'd like to sell you the golf course. $1.9 million. Well, they said, we can't pay $1.9 million, we'll pay $1.1 million. So, okay, dang it. And then he went to the lender and said, I think I could get you $500,000 for that $900,000 or $1 million that I owe you. They said, well, how quick? He said, well, probably a month. Bam, month, money, bam, money. Pocketed $500,000 and still owned 100 lots. Okay? But anybody else would have said, oh, the end of the world is coming. Sky is falling. It isn't. Not if you step back and objectively look wherever you are. There's daylight out there. Now, I've seen darkness. It ain't pretty. Okay? That wasn't a tunnel ride either. Those guys didn't see any daylight. But things get pretty bleak when it seems like, and you feel like you're the only one in the world that has a problem. You're not. Everybody out there has that same problem. Be careful of how you think. Sometimes it hurts. So, anyway, I've run on about a number of different things. I've never planned on what to speak about tonight. I would rather find out what you guys want to do and how you, if you have a question, how can I help you structure your problem? And I don't care if it's on a house, a lot, you ended up with a trailer house on a trade you can't get rid of, you found out that the lot you got was a little closer to water than you wanted. I don't care what it is. If you have an issue or a problem, that's what I'd like to hear about.
Let's do this. Is there another mic over here? Oh, she's got it. Okay, so while everybody figures out the question that they want to ask Duke, maybe I'll ask you just a few questions. So out of your entire career, what has been the favorite deal that you have ever done?
Can I tell you one I didn't do?
Sure. Yeah, sure.
Yeah. Well, I've done several of them I should have, could have, would have done. Looking back on it, hindsight is so clear. I don't know how you can see so good in that little rear view mirror, and I can't see out the windshield. It's huge. But when I did the Super 8 motel, the bank said you have to have a franchise. So I checked around. The cheapest franchise I could find was $15 grand. It was for a Super 8 motel. I flew up to Aberdeen, South Dakota, met with a guy, said I need a franchise. He started telling me about it. I said, no, I need your franchise. I don't need to know how it works. I don't care how it works. I need your franchise. Matter of fact, I'm not going to rent rooms for $8 a night. I'm getting $18 a night out of a flea bag. Why would I pay $8? I'm going to take $8.88 and be full. Doesn't matter. So he said, he took the check for $15 grand. He said, for another $5,000, I'd sell you 5% of my company. I said, I don't even want your damn franchise. He later sold that franchising company for, I think, $4.5 million, and then since then it's sold for $55 million. I left a little meat on the table there. When we built the Holiday Inn, it had an auto salvage yard out on the front of the highway, in front of us, 5 acres of ground. Guy by the name of Studi, Jack Studi. Forrest was his name, I'm sorry, his son was Jack. Forrest was a drinker, and he was a little crude, and he always looked like he was a drinker. So at the closing table, we agreed to buy his 5 acres for $150,000. We signed the paperwork, and he said, for another $50,000, you can have my stuff out here, all my salvage. We said, take your salvage and get your crap off our dirt. Price of scrap iron went up. He had 90 days to get it done. He netted 250 grand on his scrap iron. So, if you think you're the smartest guy in the room, you better get out of the room. You ain't the guy. Okay, so those are two things that I always fall back on. I don't blame myself. It's kind of like you're playing poker, and you have a 7, 8 of diamonds in the hole. Has anybody here play poker? There you go. 7, 8, what do they call it, suited pair? Not a, anyway, 7, 8 of diamonds. A trusted poker player, will they play that hand? Somebody that's experienced? Sure. Depends on what? What does it depend on? I've got 2 down, 7, 8 of diamonds. Another card that's not a diamond. I'm going to get 4 more cards. What are the chances of me making a straight or a straight flush?
Less than 8%.
not 24%. Now, if I'm the first one to start betting, I fold. If I'm the last one to bet, nobody else has bet, whoa, limp in. See where you go. So it depends on where you are in the game, how you play it, but everything we do is a bet. If I turn this around and Wes says, I think I can make 50 grand on that house. So you want to bet? Now it changed, didn't it? Because now all of a sudden you're thinking, oh, that's gambling. Don't get caught gambling. Think of the ways you can get, your mind does funny things with you. So you got to see the positive, where can I go? Corey, you're a pilot. I suppose you use GPS, so don't you?
Yeah, we do today.
The old days we didn't have that. Okay? I could take off and fly from Gillette, Wyoming to New York City. 98% of the time I would be off course. I think the GPS and your autopilot keep you on there.
Yeah.
But at that point in time, it was kind of a scientific wild-ass guess whether we were close on there. There's a railroad, there's a river, a highway coming up, and I know right where I'm at. But you always had to make slight adjustments as you're going to New York City. Always got there. I'm not to New York, but my point is, when you're buying a piece of real estate and you see your end game, you're going to be off course 98% of the time. There is no magic formula. There's scientific guesses. There's a factoring that I do. Everybody has it. Christoph has got strategies that I can't even figure out what he's talking about. And he does them very well. I wish he would take and tutor me. Tutor. Mentor, that's a better term for it. So, those are there. Now, as far as my favorite deal, okay, I started buying the discounted notes back in 2012. And that probably is the most fun thing I do, is buying discounted, distressed notes. And everybody said, what does distressed mean? It means that it was causing stress to a banker or a holder of that note, and I took away his stress. Distressed notes. So I make my profit when I buy, not when I sell. Wes came down here from Cheyenne. He was one of the investors we had in a deal where we bought a $3 million second mortgage, had a $4 million judgment because they had judicially foreclosed but never extinguished the mortgage. It was behind a $6 million loan on a house that was probably worth $5.5. He had lawsuits. He was in Chapter 11 bankruptcy. SEC is chasing him because they thought he did insider trading. I don't know what else. But it was a note that it had a pretty sour taste in that banker's mouth. And they, I think, would drive by his house to make sure that maybe see if somebody started a fire, because they might be able to collect all the insurance. Those type, it would left a really bitter, sour taste in their mouth. So, no, you can't join in on this one. What do you think we paid for all of that crap? $720,000. I don't have 720 grand, didn't have it in my pocket. Wes had some, several other guys did. We used a private placement memorandum. We pulled together. My partner and I put in about 400,000, and we raised another 320 or whatever the number was. They each owned a part of it, so we were part of the Class A and part of the Class B stock, both. I mean, my partner and I did the deal. So that gave us all the money, and when I agreed to buy this thing, I didn't know where the money was going to come from. I just knew that if it's a good tree, somebody will help you climb the tree. It took us 15 months to unwind that deal. The investors, part of us and part of the other investors, and us, the sponsor, sold the note for $2.5 million. 15 months. So the investors more than doubled their money. It was about 103% or something like that. They doubled their money, and I hate to tell you this, but Kirk and I made $1 million. So that's a favorable. Okay? So it worked out very nicely. Some of those don't work out as nice. I have taken deed in lieu of foreclosure, people renting a house back in Kentucky, taxes are out of the roof. And as they're moving out of the house, they set the house on fire, collected $57,000, had exactly $1,100 invested in that deal. Okay. That's a nice one, but it's a bad story, but it turned out okay. I didn't know how we were gonna get through that one. The Consumer Finance Protection Agency said, well, you guys can't own this, you're not a mortgage lender in Kentucky. No, we own it, it's ours, can't do it. Anyway, so there's all kinds of issues, problems you don't even know about in a real estate transaction. I don't care what it is I've ever done. If I knew all the problems getting from point A to point B, I wouldn't do the deal. But I love doing the deal and doing all of those things as they come available to me. But if I knew it in advance, probably not. Probably our best deal to date is a building in Cheyenne that we bought. It's a 5-acre building, 207,500 square feet, so 4.98 acres. It was going to be a bucket of rust. Manufacturing company had moved out of it and gone to Mexico. It's before Trump was elected, of course. He would have made them stay. But they had written this thing down. They'd owned it for like 35 or 40 years. And they had written it down to $200,000, which was the cost of their ground. Everything else had been written off. They were trying to sell it for $2.5 million, I think, or 2.7. A nonprofit came in and bought it from them on what's called a bargain and sale deed. Now, after 40-some years in the business, you'd think I knew what a bargain and sale deed would be. I didn't. It's an opportunity for a nonprofit to buy at the basis of the property, turn around and sell it. They make the money. The owner of the building wrote off, there's a certain appraisal that is used by the IRS. They had an appraisal for $5.7 million, so they wrote, or 5.9, they wrote off $5.7 million, done. So they didn't have to pay recapture on the depreciation, which would have eaten up, they'd have paid 70% of whatever they got in recapture and everything else, in taxes. So, another tool for your toolbox. Look for distressed assets that have been owned and occupied by somebody that no longer is there, and they've written it down to nothing, nothing, nothing. They bought it, and 21 days later, we bought it for $1,350,000. After their commissions, title expense, selling commissions, and all that kind of stuff, they netted $1 million in 3 weeks on $200,000. So they got their 200 back, plus $1 million in profit. There's a company out of Florida that's all they do. They go across the country looking for these type of assets. They are the nonprofit. But knowing it, I now have learned something that I can take and set up CSU Foundation as the buyer. And I buy from the foundation. Make them some money. Everybody says, well, why would you pay $1,350,000 for this? I divided $1,350,000 by 207,500, and I found out it's $6.25 a square foot for that building. The slab floor, I break everything into a commodity, for the lack of a better term. The slab in there is 6 inches thick, big enough to hold heavy machinery, trucks, all this kind of stuff. That would cost me almost $1,350,000, $6 a square foot. The footings, foundation, steel building. The land is only worth $3 a square foot. Oh, there's 30 acres of it that went with this deal. So the land is worth more than I paid for the building. So you have to change your thinking. Oh, I didn't have $1,350,000 either, but I had a guy. I know a guy. That sounds like the flood is happening, doesn't it? I know a guy. He's got a boat. He had money, and we went to him. He said, "What would you do on this?" He said, "Well, why would you buy it?" I said, "Because it's $6.28 a square foot. I think I can make this thing worth this by doing this, this, and this." He said, "Okay, you want to close it by Friday or what?" Now I have to pay 16%. I had to pay points. Oh my God, I would never pay 16%. What, you wouldn't? To steal something, you wouldn't pay 16%? Why? If he charged me that for the next 5 years, I wouldn't have as much in it as people would have in the land. So sometimes it's that little thinking that we get, oh, that's almost like credit card debt. Almost, not quite, but almost. but it's a heck of a line. And the reason they took our bid is because we said we will close it in 21 days. Got the money, closed it in 21. So sometimes that paying extra is worth every penny that you have. So anytime I offer somebody something really low, and by the way, if you're buying distressed assets and you're not embarrassed when you make the offer, you're paying way too damn much. You've got to be embarrassed by it, because otherwise you're overpaying. End of 3 stories.
Dimitri told us the other day at breakfast that he said, if you're not falling out of your chair this year writing offers, you're not doing real estate. And he said he wanted everybody at breakfast that morning to write as many offers as they could this year that would make you fall out of your chair. Because I think the market's going to start supporting that. So one last question that I have, and I know you've given a lot of amazing advice tonight to explain a lot of things. What is one thing that you would impart on everybody here that would make them a better investor tomorrow?
Well, I guess the first thing is start. I don't care what you're going to do. If you don't start, you'll never finish. Guaranteed. This doesn't happen. So if you have an idea and you'd like to do it, figure out how to do it and do it. Because it's the first day, it's the day you start. It's like, oh, by the way, how many people have got their New Year's resolutions still current? Good job. Everybody makes those things, and usually by this time, I notice the parking opens up in front of the exercise places. But for the first 5 weeks, man, I couldn't park in front of Starbucks because they opened up a little workout joint right next door to it. Now I can take 10 people to coffee. But so I think that's one thing, is just get started, and don't worry about it could. If I ask a room full of investors, what's your biggest fear? What is your biggest fear? I would say, I'm talking about people that have not done a certain type of investing. Their biggest fear is, I'm afraid I'm going to lose all my money. Well, then don't do it. Or learn why you're not going to learn all your money. Are you going to step off a cliff? Holy crap, that's a long ways down. Or did I just step off of a curb? There's a lot of curbs. You can recover from a curb step. It hurts your back a little bit, but you can get there. But you just aren't going to lose all your money. That's an exaggeration that we work on ourselves. So start and figure it out. Can I stand a hiccup? Can I stand a curb stop? What am I looking at? And what am I giving up if I don't? Because I can tell you how much you make if you don't do it. 0. I would encourage everybody to learn how to use a financial calculator. I find that a lot of people, there's a guy that I know from Denver, comes up here once a month. Okay, he has an ICOR. No, he hates financial calculators. He said, I hate them. I don't know how you make a decision without knowing your numbers. And I mean, if I'm buying, I'll give you an example. A guy has refinished his fourplex. He needs $8,000 for the rehab. He had kicked a guy out, now he has $8,000, but he doesn't want to refinance his fourplex to get the $8,000. He doesn't really want to go to the bank and borrow $8,000. And the rents are $800 a month. I will buy a year's worth of payments of his income for $8,000, 10 for 12. Everybody says, well, that's a 20% discount, or a little less, because it's, 2/12. Oh, anyway, my yield on my money is 35.07%. It's anytime you can buy 10 of the same payment stream, get 12 of them for the price of 10, you will make 37.07%. It's just something, you learn it by using your calculator. I buy income streams all the time. Notes. Somebody says, well, I don't really want to sell. I don't want to take a big discount. This is a $100,000 note, and you're wanting to buy it for $70,000. You don't want that. What do you need it for? What are you going to do with the money? Well, I need $20,000 to pay off some credit cards. Oh, well, why don't I buy X number of payments, and I'll give you $20,000, and you keep the rest of it. Or I'll buy half of the payment, for X number of payments. I might make 16 or 18% by doing that. So there's so many ways to look at the same thing. We all walk around and say, oh, I like that wallpaper. I like what's in behind it. I can't even see it. So, or I like the wallpaper I'm going to pick and put over it, you know. So we don't see what you see what isn't there.
Does anybody have any questions for Duke?
Make them easy.